Let me get your take on this, Dan, as our resident accountant. When you advise individuals, even companies, about how they plan for something like this, normally they have to cut back somewhere else. I'm sure many of them, companies specifically, have made plans for this, to brace themselves for this. They might not have made plans for some of these other things that Liz touched on, like the global tax and all of that. What do you make of what they're making out of this now and planning for this now?
Neil, like anything else, corporations are going to do what they have to do to preserve their bottom line. So if taxes are going to go up, they're going to look to cut in other areas. And one of the prime targets always is cutting back on human capital, figuring out how to use artificial intelligence. That's one piece. The other piece is migration, physically moving. What I believe that we're going to see here is what's called corporate inversions, where you're going to have American companies that are multinational, that are going to look to become something else. And what does that look like? It looks like headquartering elsewhere. For example, you buy a company in Ireland, you move your headquarters to Ireland, and then you get the benefit of that tax rate. We saw that during the Obama administration.
But you can't escape it, Dan. You can't escape it, Dan, if the president somehow succeeds in pushing this global tax thing. Keep in mind, Europe has been kicking this around a while. I think they were at 12%. The president said 21%. But having said that, I think what he's trying to do, I don't know will succeed, is make it so that companies can't run anywhere to hide. What do you make of that?
Well, I think that's going to be difficult, Neil. And what will happen is, depending on how this law is written, corporations will look for a way around that simply by figuring out how to move, where to sell from. This has always been the game with corporations in the U.S. tax laws.
Dan, we just finished a strong quarter. We're starting this one on a good note. We'll see how we go. But I think 4 quarters in a row where the market appreciated more than 50%. We haven't seen a 4-quarter performance like that since, I think, 1936. You were just, a young man in those days. But I'm just wondering, kidding. I'm just wondering how you see this quarter we're in shaping up, and indeed this year right now with all of this.
I think, Neil, the trajectory of the market is going to continue. I mean, this market is just incredible how it wants to keep going up and going up, in spite of the news that we hear, in spite of corporate taxes, in spite of inflation, in spite of rising interest rates. This market just wants to keep going. I don't think that we're going to feel the impact of these policies and a lot of what's playing out until 2022. So I anticipate that the market will continue to rise as it has been.
All right, I'll hold you to that. If you're wrong, I'll get you back on to bring it up. But if you're right, I won't get you back on because you'll just crow about it. Guys, I want to thank you all.